Welcome back to another video. So in today's video I'll be giving my trading 2-on-2 stock portfolio update. It's been 2 or 3 weeks now since my last update, so I'm probably long overdue for one, and quite a bit has happened in the last couple of weeks as well in terms of my own portfolio and the stock market in general. So you can see we've got red in the market now for the first time in probably quite a few months. Maybe we've been quite bullish really since last March, when the market collapsed around 20-30%. Everyone sort of freaked out when obviously the you-know-what hit and stocks just went tumbling down. And if you're a wise investor, you probably see that as a sale. But a lot of people panicked, sold. But that's probably not the thing you want to do, especially when it's not actually anything to do with companies per se. But I got sort of similar feelings with this little, not say crash, but correction, which is what it is. It's not a crash. It's nowhere near a crash. It's my portfolio is 6% down overall, which is nothing really in the grand scheme of things. So I'll be showing you my best and worst stocks. The first one we have on the list is Apple. Apple have been struggling in the last month really, so they're down just under 10% in the last month. Main reason for Apple's struggles is Warren Buffett's company Berkshire Hathaway sold quite a large percentage of shares in Apple, obviously driving the share price down, which was around at this point, I think, or maybe a bit later on, round about probably here, I'd say. But yeah, Warren Buffett's company sold Apple, which is a big reason for the dip. Obviously, yesterday, if you're watching this will be sometime in the future, but the market did take a massive hit, which was on the 23rd of February, I think. Went down quite a bit. So if you look at Apple in the grand scheme of things, I actually tweeted a picture out of Apple's share price over the last week and month compared to the year and 3 months, so they're still absolutely killing it. Look, it's just minor blips. Companies like Apple have them. So I tried taking advantage of a couple of shares. I didn't buy it with the big sort of dip, but I did buy some on, what day was it on? The 19th of Feb. So timing sees, well, I mean, you can't really time the market, but they're still dipping anyway at this point. So I got 3 shares, and my average cost was $130, even though technically they are still $125, but they really are down from the 143 mark, which was that. So even at the 130, I consider that to be a bargain with Apple. So I have just over 8 shares and I'm £45 down now. I was around £100 down yesterday, but we've managed to crawl our way back up a little bit. And then a couple of sort of speculative plays, the Tulsa Therapeutics and Bionano Genomics. Bionano, I'm actually £50 up still, but they are down in the week 34%, but still up in a month just about. This is a stock which I like, which I did a video on a week or so ago. If you want to check that out, I'll link that in the description. But I have big high hopes for this company. I've got a massive bit of technology on the hands with the Sapphire machine. I think it could really help with everybody in the future. So just under 40 shares, I'm up £50, which is still good considering the correction we had on the 23rd of February. Then we have Castor Maritime, which is another penny speculative stock that I bought. I'm still up £72 with these, even though they are down 9% yesterday, but they're still up 177% in the month, which is good. I do feel like this company, the more vessels they add, obviously, to the itinerary, the more this share price will go up. So I'm definitely going to hold this for now. If I do get to 100% up, which I'll talk about my mistakes I've made with some of these penny stocks later on, guys, I'll definitely consider selling if I get to that point, or taking my profits at least. And next up we have Global Star. I'm struggling with this one. Global Star, 9% down yesterday in the month. This 58% up, so this could be a good buying opportunity here. They've had a large rise, but obviously a bit of a dip round here. But I do think this company, who provides satellite service, especially all this 5G coming out now, I think they could be a good player in the future, and they're only at $1.68, so it's worth taking a punt on a number of shares if you can buy the dip with these. So I'm £124 down, or 31.2%. Then next is one of my newer purchases, which is Ishares, electrical vehicles ETF. I do quite like the sort of ETFs with the electric cars. I do think in the next 10 years they'll become more prominent, and you can see the growth in the last year. This ETF has been really good, over 50% up. I'm down just over 2% with this ETF. But it's definitely one I'll be looking to add more to in the future. Another ETF which has been getting absolutely hammered recently, which is the Ishares Global Clean Energy ETF. Again, another good ETF which I feel like will do well in the next 5 or 10 years or so, with everyone moving away from more oil and gas into more natural resources of energy. So I'm down £74 with these overall. I'm just over 49 shares. But you can see they have had a bit of a climb back today. So currently today, on the 24th of February, They're up 3.52%, which is good. But you can see they've been tanking it in the last week and the last month. So, but even if you look at the graph on the share on the overall in the last year, they're still up a massive 78%. So this could be a really good buying opportunity for this ETF. Next over is Microsoft, obviously one of the tech kings. Just 3 shares owned on Microsoft. I'm down 3%. The FX fee is an absolute killer. That's the only thing with investing in American stocks. And the FX does have a bit of an impact on your investments. So I'm actually up in my gain and loss, but the FX impact is crippling me. So another one for the long term. Hold Microsoft, good solid company. Obviously, $1 trillion market cap. And one of my new purchases, which is Nike. I tried to look into more of a growth stock or a good solid sort of growing stock, which I'm a consumer of as well. I do like a lot of Nike stuff, football tops, trainers, football boots, etc. I do purchase quite a lot of them, so I thought I might as well be an investor of them at the same time. So they are down, not too much movement with Nike really, but in the last year they're up 35.91%. And I'm down 6% on my investment with the 3 shares that I currently own. So next, this is my this is a harsh lesson for myself that I had to learn, but this is how you do. You live and learn. Sundial Growers. I purchased this stock around this point when it was possibly, let's have a look. It was, yeah, just over $1.1 around this mark here, and I saw it all go all the way up to just under $3 a share, and at this point I was over £200 in profit. But what did I do? I didn't listen to my gut when I said I should sell, because with these sort of stocks, you as high as they do go, as quick as they go up, be prepared for them to go down quickly as well. So at this point I should have taken my profits, but I didn't, and since then it's just gone down. Obviously yesterday, with all the stock market being red anyway, it made it even worse. So I'm still slightly in profit, just over 3.54%. I'm going to leave the money in there again and just see if I can sort of shoot it back up. But I do think if it does go low, I might consider selling. It just depends. It is quite a good company, to be fair, and you know what is. It's an industry that's growing and getting legalised over more parts of the country, the world, sorry, especially in America. So you live and learn, guys. You've got to learn from your mistakes. And then with his Tesla, this Tesla has been absolutely tanking it, especially in the last month, really, even before the market hit red yesterday. 17.5% down in the month. But again, look at them in the last year, 287% up. And this is probably one of the biggest drops they've actually had. So it was around almost at the $900 mark, but now at $698, this is a great opportunity. I wish I had obviously cash available to buy this stock, but I focus more on Apple as I can afford more of the Apple shares, which I've been buying. So just one share of Tesla, which is I'm down just under 20%, or £122.87. So that's the portfolio, guys. Now I'll head over and just check out a couple of dividends I've received from companies I've actually sold from, obviously when I changed my strategy from dividend investing to more based on growth. So I'll go over now and check it out. So recent dividends I've received. I received an 89p dividend from Hormel Foods, which stock I've obviously sold. 6 number of shares of AbbVie, which I received a £4.71 dividend for. And then I actually received 3 dividends in one day from Apple, which is quite weird. I think there's a bit of a glitch in the system on trading 2-on-2. I got paid the same dividend 3 times, which unfortunately took back, but hey ho, it doesn't matter. And then a few more dividends in February, which I think I covered in the last video. But yeah, that's it for dividends. So that's pretty much it for today's video, guys. Let me know what you think of the portfolio as a whole, and what your strategy is for when the market is red. When this video will be out on the Saturday, I don't know what day it will be, but the market hopefully will have gone back up by then. So let me know if you took advantage of these on sale prices of stocks that you love. So on that note, take it easy, guys. Take care.